What's going on, Carson? How you guys doing? Just gonna wait a couple minutes. Alright, thanks, Carson. Let's start up here in a couple minutes. What's up, Bikram? How you doing, brother? Alright, so it's 4 o'clock. Welcome, guys. We're just gonna go over a couple charts. We'll go over a couple other things as well in here. Just some stuff I'm seeing in the group nowadays. There's a bunch of different types, so we'll go into first time on your plays. That's very important. When you guys enter a play, you have to know what are you trying to get out of this play? How long are you trying to hold this? How you doing, Andrew? How you doing, Jeff? Welcome, welcome. Hope you guys are having a good long weekend here. Just gonna go over a couple of things here. First of all, KB, welcome, welcome. I don't know about evening, it's only 4 o'clock, but wherever you are, maybe. Hope you guys had a good weekend. Again, welcome. And so what I want to start with here first is basically there's different plays in the market. What's up, Harmon? How you doing? Our goal here at MSL is obviously financial freedom. We want you guys to be able to trade and pay for your expenses and your bills and everything with the money that's coming in from your stock account. That's obviously what you want to do. The final goal for me personally is to live off my dividend account. So I want my dividend account to produce enough dividends to the point where I can pay all my bills, pay everything I need to pay, take my trips, vacations, whatever, and it's all paid out by dividends every month. What's up, other Andrew? How you doing? So basically what I want to go into first, is when I call a lotto play, or Ricky calls lotto play, or someone else in the room calls a lotto play, that means it's basically just a lottery ticket. So if you have $120 in profits, let's say you made $1,000 on the day, you won a lottery away at the $100, you have a good risk reward play. Well, not really good risk because it's going to zero if you're wrong. But basically what I mean by that is, let's say you made $1,000 in a day. You have profits of $1,000, okay? This is just examples. None of these is accurate, whatever. So what do you want to do? You find that Tesla has a chance to go up $50. Tesla has a huge chance of going just ripping the next day, right? So what you do is you take a Tesla 300. Let's say you take a Tesla 200 call. That costs $50, right? To get more, each contract is 0.50. I should write that instead. 0.50. So basically, you made $1,000 on the day. You feel like gambling a little bit. You take a lotto on a Tesla call. What's your sizing on this? The max I would put into this, I have $1,000 profits on the day. I would probably buy 2 contracts just as a complete lotto. If it goes to zero, I've only made 900 that day. If it hits, then maybe I can add to that 1,000 and get even more profits. How you doing, Dave? Happy Family Day to you as well. Happy President's Day to everyone in the States. And basically what I'm going over is, I'm not going to go into the deep into this, into the, how do you say, risk management. We have separate sessions on how much you should be risking of your account on each play. You should go watch that if you want to get more insight into how much you should be risking on each play. This is just a common thing. If I call a lotto and I'm up $1,000 on the day, I'll put $100 into that lotto, or 150 max. And if the lotto hits, I end up making $1,400 profit that day. If it doesn't hit, then my profits go down to 900. So this is the meaning of a lotto. When we're talking about a swing trade, let's say you take April puts. For example, I am currently in Apple April puts. Let's say I want a total in that in the Apple. Jesus Christ, I can't even talk. But let's say I want $2,000 position in that April put position in Apple, right? So what I'll do is, let's say they cost $2 each. $2 each. Instead of buying my whole $2,000 position, I will level into this. This is how I approach 2-month, 3-month out swing puts. Let's say I have $2 a contract. I'll buy 10. Like 10 of them would be $2,000, right? What I'll do is I'll buy 4 or 3 or 4 at the beginning. So let's say I buy 4 here. I buy 4 contracts. That'll put me at $800 total position sizing. I want $2,000 in there. Instead of putting the whole 2,000 in, what I can do is I can add 4 one day. I can try to catch the top the next day. Let's say the next day I see Apple has hitting a huge resistance. We'll go into the chart after and I'll show you exactly what I mean. The next day, Apple keeps going up, so those puts go down to 1.4, let's say. 1.4, and then I add another 6 of them to get my 10 contracts. Let's say, I can't even do that math right now, but let's say, just for example, we end up with an average of around 1.6 on these puts, right? 1.6 on these puts. Even if I get a little bit over my $2,000, let's say I have $2,200 total in there. I wanted $2,000 in those puts. I ended up going to $2,200 because I saw the top. I averaged in. I got a 1.6 average. What I'll do is I'll get that position size back down to $2,000 as quickly as possible. So I have an average of 1.6. Let's say even if those puts go back to 1.6. So I bought more at 1.4. They go back to 1.6. I'll get rid of the excess. I'll get rid of the 4 or 5 contracts that I want, whatever, at 1.6. Once I get rid of those, I'll end up with, it's really hard to do this without real live examples, but I hope you guys are understanding what I'm saying. If I see Apple is overdone, and let's say I wanted $2,000 in there, I got in too early, Apple went up. The next day I seen Apple is ripping, but I seen a lot of other stuff, a lot of other signals that is telling me that we're not going to go too much higher. Let's say the RSI was overbought or the stochastics were way overdone on a bunch of time frames. And I just sense that there's a pullback coming like I did back here when we called it at 1.7. You guys seen it on the day of the FOMC when I top fished this right here as well. So basically I got in the Apple puts early. I went in with my typical 5-6 starter position. Got my rip, averaged in really big here. So what I did was I'm not going to hold that whole average. I do not want that big of a size. That's way too much risk for me to hold overnight. So as soon as we dipped down, I bought them at 1.7. They went to 2.3 the same day. I took off most of them actually from 1.7 to 2.3. I was left with around 10 contracts with an average of 2. So this is how I trade personally. Like I said, a lot of people in here have found one way to trade, one key way. You've seen Two Stock Shakur, he day trades Tesla all day. He just crushes it completely. You've seen Ricky, he's mastered SPX. So that's what you want to do. You want to find your specialty. And whatever works for you, you want to focus on that. But my way, personally, I swing, I do equity, I do day trades. Day trading I've cut down a lot recently just because I haven't been watching the screens as much. You know, life gets busy, this and that. But that's my example for what I'm saying right here. Let's say if I got Apple here, right? I'm like, oh, Apple, this is the top. I take my 5-6 contracts. If it goes straight down, I get paid on those 5-6 contracts. I take my profits. I'm happy. If it goes against me, I still have money that I was waiting to put into this position. I averaged in. I got in even heavier than I wanted to. I timed the top perfectly. I'm very reluctant to call these because a lot of members in here, instead of knowing that they were supposed to only go in a quarter or half position here, they go in full size here, they add another full size here, and then if the position continues to go against them, they add more. And you keep adding more until you just break your account. That's not a way to trade. You have to know your risk. If you're wrong, you have to know what to do to get out of that position. So that's basically what I wanted to go over in there. Equity positions, you guys seen Ricky has been adding a lot of Amazon and Google equity, I believe. Not a bad thing, not at all. I'm not adding anything yet as far as growth stocks or tech stocks, because I do believe we are going a lot lower. Just personal opinions, you know, there's not much else I can say about it. Of course, we can go straight up. The bottom can be in. We can go straight up from here. There's no doubt about it. But it's not what I see happening, and I see us going actually a lot lower. But I don't know when. I don't know the timing. That's another part of the timing question scenario. Can you get long and make a killing on calls when we're short squeezing in the market? Absolutely. You guys seen Tonka, you've seen all the boys in the room, Mohammed. They've been crushing calls like intraday. What's up, Gogan? How you doing? They've been crushing calls intraday, 2 day holds, 3 day holds, 4 day holds. You can be bearish for the long term and still play the long side in the short term. So remember that. Always define your time frame on every single trade that you take. So basically Amazon here, like I see nothing that gets me involved in Amazon until the lower 60s. Around 60s, I'll start adding in equity. I do see a lot more downside, unfortunately, for the market in general. Whether they do it now, whether they take till May, whether they take the market completely sideways till May, I don't know. But I do see a lot of downside. I do see a lot of fundamentals broken down. You guys are watching in the markets what's happening. It's hard to ignore the macro and trade on a day-to-day basis. But that's how people are killing calls still. People are still killing puts, whatever. The market is strong. It's holding. But it's only a matter of time, in my opinion, before we do go down. And that's why I think my favorite position right now would be long-term shorts, long-term puts, long-term short equity. And that's just how I'm playing it right now. So we'll see where Amazon goes. That's not the point of this. We'll go into Apple here first. So Apple's been holding up the market. You see the 20, this is a monthly right here. So the monthly charts do show that we are in a bit of a bounce here. We've been down ever since we did start going down. Top of the market was January 22nd. Significance in May. So there's a lot of stuff I researched, Carson. The thing is, a lot of the Vanna and Charm effects. There's a lot of stuff with the VIX that goes down. It either happens in late February or it happens in May. So by that I mean late February, there's a window of weakness we're in right now, actually. We'll go into that too. I'm just going to keep rambling today because we're all over the place. Sorry about that, but we'll go into that right away. Just give me a second, okay? So we'll go into the dividend account first. Since we're on the time thing, we'll go into my week dividend watch list here. So this is for Canadians. First thing you want to do, again, this is just comments. This is just me talking, guys. If you want actual answers, go to your accountant, figure it out, read up on it, do your thing. But in Canada here, we have two things mainly. It's called the TFSA and RRSP. TFSA is tax-free savings account. You want to max that out before you even touch anything else. You want to max out your TFSA. Once you max out your TFSA, then you start worrying about your RRSP. RRSP is retirement registered retirement savings plan, and basically any contribution you make to that, you can deduct your taxes from it. So ask your accountant about those. Ask what you can do to deduct your taxes every year by contributing to your retirement plan. And that's just the basics of it. So go look into it for your own situation, your own money. And this is my dividend account. So this is what I have in my TFSA right now. Basically these 7 or 8 names so far. And if I find something that pays a nice dividend that's cheaply valued, I start adding it in. So this is what I'm talking about. When I'm playing options, when I'm playing the dividend account, it's completely different. Most of you guys probably seen this BTO that I added on Friday. Why did I add it? Why am I adding long-term stock when the market is way up here? So one thing is I'm very bullish on gold. As you guys know, I do think gold goes on a huge run soon. We are near all-time highs on gold. As you guys see on the monthly chart, we have a massive cup and handle on the monthly. Huge cup, huge handle. We tried to break out. We did not. We failed and put in a double top almost. And now we're coming back to consolidate. So again, gold is struggling up here, but we're sitting right near all-time highs. Fiat money is just becoming a joke at this point. They just keep printing it. And a lot of the banks, I'm sure you guys seen the news, a lot of the banks around the world are hoarding gold right now, especially the BRICS nation, which is Brazil, Russia, India, China, and Saudi Arabia. They're hoarding gold, and they're trying to back a currency with gold. Basically, their main goal over there, in my opinion, is to get rid of the US dollar. They want to get rid of the US dollar for trade and start trading in their own currencies, which will help their economies a lot more and hurt US's economy a lot more. So gold, I'm very bullish on, as you guys know. Over the long run, I don't care if gold goes up or down this week. I don't care if gold goes up or down this month. Over the long run, over a year, 2 years, 5 years, 10 years, I do think gold goes up a lot. Central banks are hoarding it. That's basically all you need to know. So here we have BTO. I called out my initial entry way back here, I think in the $4 range. We called it out in the chat. So this is how I go about dividend stocks. So I like this little dip. I seen gold the metal showing strength. I bought some BTO. It pays a big dividend. If you guys need to know dividend yield, you can go simply to Yahoo Finance and just type it in, check it out, check out the yield. I hope by now you guys all know how to check out a yield on a stock, how much it pays, etc. Do your own research before you enter into anything. Got the forward dividend yield here. It pays almost a 5% dividend. So just for holding that stock, I get paid 5% dividend. Then you got to look into, do they pay monthly? Do they pay quarterly? Do they pay yearly? What do they pay? So look into all that. See if it's right for you. This is what I did. And this is how I manage my dividend account as well. So let's say I bought a bunch of shares down here. And when they paid me my first dividend, I got enough dividend payback to buy a bunch more shares. So basically what I do is the dividend that they paid me, I use that. I put in a limit buy at some kind of strong support or strong resistance wherever I want to buy or sell. And I buy more. So basically I bought back here in the fours. They paid me monthly, they paid me dividends all the way up here for the last year that I've been holding it. I put in a limit buy for 445. Why 445? You guys seen right from inception. Huge resistance here. It stopped there in September of 2011. It stopped there in April of 2012. Tested it in July of 2016. Tested it in Feb 17th. So you guys see the resistance is building here. Once we got through, you guys seen this massive squeeze on it. We pulled back, it formed support there. We pulled back, it did a little undercut, and then we went right back above it. So we pulled back now again, and I bought some there. So this is obviously a point of interest on the stock chart, 445, 450 area. So I put in a limit buy, it filled me, now I got more stock. Now I just hold it, see what happens. If it goes under, it goes under. Next time they pay me a dividend, I put another buy order for more stock. So I collect more dividends. So that's the point of this. Find solid companies that you're comfortable holding for the long term. This DFN here is a secret cheat code of Canadian investors. Basically, a lot of the Americans that are watching right now, I know you're going to ignore this, but you guys can find these exact same types of stocks on the American stock markets. You can find a lot of Vanguard plays are just like this. They pay the exact same dividend. They're backed by the banks. They're backed by covered calls. Very solid, long term. Make sure they've been paying the dividend for a long time, increasing the dividend. They never cut the dividend. But anyways, this DFN Toronto is one of the cheat codes of the stock market, in my opinion. DFN and FIE. So these are both backed primarily by banks in Canada. Banks in Canada are covered by the government of Canada. So they are backed by the government. They cannot fail. So basically what we're doing here on DFN, if you guys look at this, they are paying a ridiculously high dividend yield. I've looked into this a lot because it didn't seem real to me. It seemed too good to be true. First of all, they pay monthly. They pay a monthly dividend on DFN. Second of all, they're paying a 15% dividend right now. So you get $1.20 a year. In one calendar year, you get $1.20 of dividends for every share that you own. So you buy a share for $7.89. After 12 months, you're getting paid $1.20. Even if you buy one share, after 7 years, that share is free. And that's with one share. And I have a little more than one share. A lot. If you're investing in dividends, you probably want more than one share, but it doesn't hurt to start anywhere you want. DFN pays 15% dividend per year. You get paid out monthly. So take that 15%, divide it by 12. That's your yield for monthly return on a dividend. So this is a cheat code. I have a huge account in the same story, guys. You buy it, you collect the dividends, you put in a buy order. Let's say weekly, monthly not showing anything, weekly's right here. We got it sitting right on top of all the moving averages. Let's say we want to keep it on top. You can put a buy order in at 736. You can put a buy order in at 760, which is these moving averages here. As you guys see here, it's the 20, 150, and 200. You can use whatever moving averages you like. You can add wherever you want. And this is a long-term plays, guys. Dividend plays, you hold them forever. You keep adding to them. You keep collecting the dividend. Keep reinvesting the dividend until you're retired and basically able to live off your dividends. FIE, same story. If you guys look here, FIE backed by the banks as well in Canada. Yeah, right there. These guys also pay out monthly dividends. They've been paying for years and years and years. It's a 6.75% yield. Same story, backed by the banks, backed by the government. No fear here for me. They've been paying for a while. You can put your buy limits wherever you want. LMT, America's never going to stop going into war. If you guys remember, in MSL, I called this one out first at around the 300s. And we were breaking out of this little pattern here. And obviously, COVID hit, kept adding. They pay a nice little dividend here, too. And LMT is not going anywhere. America's always going to be at war with one country or another. Enbridge, oil. I got oil covered. I got banks covered. I got gold covered. I got war covered. I got China covered with XCH. This one's a little lower dividend, but it covers all of China for me, and I want to be long China. PBR, another oil company. This one's actually in my other account. It's not in my dividend account, but it does pay a humongous dividend, and they've been paying out weekly. This one seems a little bit more risky to me because it's in Brazil. And honestly, I don't know too much about the politics there, but seems like a mess at the moment. Other than that, let's go into some of the stuff that I'm watching every single day while I'm trading, and then we'll go into some charts for this week and beyond. So first of all, we'll go into the daily stuff I'm watching. We'll go into Ethereum, Bitcoin. There's always correlations in the market. By what I mean by correlations is you can clearly see that Bitcoin rips first and then ES goes right after. Or you can see oil is dumping and tech stocks go up right after. So that's a correlation between two assets. So basically, I'm watching all these things. I'm seeing what's correlating, and that's what I'm calling out on a day-to-day basis. Yeah, Enbridge is solid, Bikram. I have no problem with holding Enbridge. So basically, what I was talking about is sometimes it correlates with Bitcoin, sometimes it correlates with Bitcoin, sometimes it correlates with there's a lot of stuff. Oil, yields, dollar, and we'll just go over a couple of those things. Right now, we have a daily chart of Ethereum right here. Daily chart of Ethereum. It's so clear to me what this is going to do. I don't know when it's going to happen, but it's going to happen. As you guys see here, I got a picture of the RSI down there. I got a picture of the daily chart up here. You guys can clearly see it's making new highs, but the RSI is going downside. So RSI is basically a relative strength indicator. When you guys see something as clear as this on a daily chart, it means the price is moving up, but the momentum is to the downside. So very soon, I don't know if it's going to go up here to 1800s, 1830s. I don't know when it turns, but when it does turn down, the momentum's going to take it to the downside. So right now, it's showing a very clear sign of reversing down to me. Right now, market's holding up well. Bitcoin's holding up very well, like even stronger than the market is cryptocurrency right now. But you guys can see clear as day on the chart, RSI is to the downside, prices to the upside. That is negative or bearish divergence, they call it. So we got Bitcoin here, same exact story. You guys see Bitcoin keeps making higher highs, keeps going up, price keeps moving up. The negative divergence is so clear here. The RSI maxed out way back here and it just keeps dropping. Now, negative divergence doesn't always play out exactly right away. But the point of it is the momentum of whatever we're looking at, the momentum is to the downside. The price keeps going to the upside. So as soon as it does turn, which it will now, that's what it's showing. Whenever it does turn, there'll be a powerful move to the downside. So that's what we're watching here on Bitcoin. We got another one. What else do we watch? We watch we'll go into yields. So yields are breaking out in a big way as well. So 10-year Treasury note yield, these are very, very correlated with the NASDAQ. So tech stocks are very, very affected by high rates. You guys see here, very clear breakout here. We topped out in October. That's when the stock market bottomed. And then we've just been dumping. We had a little rip in between here in December when the market dumped. And you guys can open up a chart here right next to it if you want to and just take a look at what's going on. So we have right here, October 13th is when the market bottomed. October 13th, the stock market bottomed at 35.02 ES. October 13th, we actually topped out in yields on October 21st. A whole week later, we topped out on yields. A week earlier, we bottomed on the stock market. So it's a little lagged effect. As you guys seen, this is a great example of last week. We seen me and Ricky were pointing out the yields were flying and the dollar was flying. We pointed it out like 100 times that day. I think it was on Wednesday. I think it was Wednesday. When was it? Let's see, I can tell you by looking from the chart. I think it was right about here. Yeah, so Wednesday, the stock market was going up here, but the yields and the dollar were also going up. So, and bonds were dumping. So that's what I'm trying to tell you about correlations. When we say these yields are going up or the dollar is going up, it doesn't have to happen right away. That just keeps my mind in bearish mode. I'm not going to take a long overnight. I'm not going to start a new long position because of those signs. It may take a day. It may happen the same day. It may take 3 days. It may take a week. Usually within a week or two, you'll see exactly the correlation that happens. And you guys seen on Thursday, complete dump on the market, straight down about 60 points. And then Friday, we got a little bit of follow through. Obviously, the market's holding up very well, but we'll go into that later. So as you guys see, October 13th, we made a high on TNX, but the yields continued to go up for another week while the stock market also bottomed and started going up as well. So you guys see here, October 19th, we were actually about 2% higher on ES than we were from the bottom. So sometimes it lags, sometimes it's not exactly the top and bottom, but it always catches up. One of them always catches up. If I ever say yields or the dollar is ripping or very strong, it's caution. It means just be careful. It doesn't mean you can't go long. I personally won't go long because I've seen enough of these signals. I know what happens after. And sometimes it just means patience and wait for the short. So right now we do have a big breakout on TNX. One thing is, this is a breakout from October. It's very clear, very obvious break of resistance, but we do have a resistance right here. So this level is going to be key moving on from now. Now let's make that horizontal line. So right now we do have this resistance at 3.906 on TNX. If we start breaking over that level, then we just go straight back to all-time highs, which is well, not all-time highs. I think we've been higher than this. We have been higher than this, but previous highs of October was 4.333. And if we break over 3.905, tech stocks will be under fire. The whole market in general, when TNX is around 3.827, even check on the weekly, you see it cleared over the 20-day moving average. When the TNX is around here, around the 3.8 levels, almost every time the stock market has been way lower. So you see back here, December 27th, TNX was at 3.9. You see December 27th was about here. So we had TNX at 3.9, I don't remember, 3.9. Last time SES was around 38.50, 38.75. Okay, so about 200 points down from where it's at right now. TNX back here, you see in October when we topped out, it was around 3,500 was the bottom on ES. You guys see way back here, not even close to 3.9 in October of 18. And you guys seen the stock market was way lower. So what I'm trying to say is the yields way up here and the stock market over 4,000 makes no sense at all. It will catch up eventually. I don't know if it happens this week. I don't know if it happens March, April, when it happens, but it's going to happen. Okay, so that's yields. You got the dollar right here breaking out of a very, very bullish pattern. This is my favorite pattern. It's the falling wedge. You guys seen it was on a steady rise all of 2022. Finally broke down, gave the market some tailwind. Tailwind meaning gave some strength into equities. We broke below the 20-day moving average on the weekly for the first time since all the way back in June of 21. So we broke down, formed a wedge, consolidated, hit an important fib from the all-time high to the low. Well, not all-time high again. Well, recent high to the recent low. And we broke out very powerfully from this wedge. So far, we have had a move on the dollar from the bottom to the top. It's moved 3.82%. So these kinds of patterns, if you know me, I've played them a lot. These breakouts tend to be very, very bullish and they last a while. We got the 20-day moving average above at 105.62. So that would be my first target. If I was long the dollar here through this wedge, 105.62 would be my first target. And other than that, it's not much to say. We got to keep an eye on the dollar, see which way it moves. If it continues going up, it's going to cause weakness in the stock market. If it rolls over again, then obviously we're going to have some more strength in the stock market. VIX has just been dead for a while here. You guys seen it? I drew this support here from a long time ago. Let's see if we can get a clear picture on the stream right now. So we got the VIX weekly right here. You guys see this big support zone here? We did test it last week. I told you guys I thought that was the bottom for VIX. Now, it did end up being the bottom, by the way. It was around 17. What's up, G Money? How you doing? It was around 17.06 was the very bottom. We bounced off that. We formed this little falling wedge. Same type of thing as the dollar, guys. Same type of setup. And you guys seen, we broke out. We back tested it perfectly. And then we were up big on Thursday. Friday, they killed it again. Friday, if you guys noticed, Carl Icahn took a huge put position that was expiring on Friday. That moved the put wall up. So you guys seen it was 39. I think it was, just don't quote me on this, but I think it was like 39.90 put wall on Thursday. And then all of a sudden on Friday, it turned into a 40.50 put wall. Coincidentally, his puts were for 40.50 expiring on Friday. So the market makers moved up the put wall. They wanted to keep the market above 40.50, so the biggest payout did not happen, because if they closed it below 40.50 on Friday, they would have had to pay out all those puts. So they kept the market above there. As you guys can see, the action on Friday as well is very typical of just market makers holding up the market, just not to pay out people. Other than that, let's go into some other stuff here. Okay, we'll go into some future plays now. I deleted all my lines on ES just for you guys. We got the weekly here, using just simple moving averages. It's very clear we are in a downtrend still. We are forming a rather bullish type of pattern here. It looks almost like a bottoming inverse head and shoulders on the weekly here, as you guys see. Could the bottom be in? Absolutely. Do I think the bottom's in? No, I do not. Let's see though. Okay, so this is a very bullish pattern here. As you guys see, we got the left shoulder, we got the head, we got the right shoulder here. If we get back above around 4,200, 4,300, I think we could rocket back up. We could start moving up. As you guys see here, the moving average is starting to cross up over again. A lot depends on this week. There is a window of weakness in the market where Vanna and Charm flows or positive flows are not holding up the market anymore. So this week coming is very important for the market in general. And one thing I always watch on the daily, if you guys open the Bollinger Bands, this is a very important thing here. If you guys use Bollinger Bands, it doesn't matter. This is basically the 20-day moving average. The top is obviously extended, whatever, bottom is extended. The middle here is the mean. I've taught you guys this before. This middle band here, that's the mean. You want the price to be around the mean all the time. And as you guys see here, since we crossed over in January, we crossed over the mean. We rallied to the top, we pulled back just to the mean. We held the 20-day moving average or the middle Bollinger Band, and we kept rallying. Then we went to the top again. When we pulled back, we held the middle Bollinger Band, which is a 20-day moving average. You always want to watch this on ES and SPX. You want to see where it is relating to the middle, the mean, the 20-day moving average. So right now, the thing that's in favor of the bears is that we finally closed a day below the 20-day moving average. We have not seen that on this whole run. We can go to SPY if you want. Here is SPY. So you guys see, ever since we crossed over it on January 6th, we never went back below it. Went to the top, held it on the retest. Went to the top, held it on the retest. Almost went to the top. And now this is the first day that we closed below the 20-day moving average. If you guys look in the past, this is always where the sell-offs start, is when we start closing daily candles underneath the 20-day. So that's what I was watching here. Sorry, I'm just rambling a bunch of stuff. I didn't really prepare anything, just went live. Started talking about everything. And yeah, so the middle Bollinger Band is just the mean. You want to stay above it. So when you guys go in the past year, this sell-off we started with a close under the 20-day moving average. Then we bounced to the 20-day moving average, middle Bollinger Band, then we sold off. Then we bounced to the 20-day moving average, middle Bollinger Band, sold off. And as long as we stayed underneath it, Very simple, we're in a downtrend. Once we close above it, then the bulls took their turn, right? We kept going above, and then they just danced around here. You guys can go back in history and look at it. This middle Bollinger Band is very, very important for the indexes in general. And what we had here in January, very clear. We closed above it, should have played the rally the whole way, all the month, until that daily closes underneath the 20-day moving average. There was no reason to be short. Now we have 2 days, or we had Friday close underneath it. This is not a complete candle. I mean, it was only open from yesterday at 6 till today at 1 p.m. Futures will open here again at 6 p.m. until tomorrow, and we'll see what happens. But if we get another daily close below the Bollinger Band, the middle Bollinger Band, which is at right now 4107. So 4107 is that magical number we're looking at right now. If we get a daily close tomorrow underneath 4107 or the middle Bollinger Band, you can expect we're most likely going to go and test the bottom Bollinger Band, which is at 4017. So right now, watch the 20-day moving average. As long as the daily is closing below it, you got to stay bearish. As long as the daily is closing above it, you can be bullish as you want. Other than that, I do expect some more downside this week. Just a few signs that I've seen, like the yields, the dollar, we've already been over. The VIX, I do think VIX goes on a killing spree very soon here. It's just personal opinions again, guys. And we'll go into some, there's a lot of earnings this week. Make sure you're watching the earnings. We got NVIDIA earnings on Wednesday. I am very interested in this one. If we rally on NVIDIA into Wednesday, I do think puts will be an easy play. The the PE on this stock is crazy. That's another thing I wanted to go over. See, I'm just all over the place. Sorry, guys. But yeah, here, look, I'll show you what I mean. We'll go into the SPX USD. So this is just an SPX cash index. Very clear channel all the way up, guys. This is a daily chart again. Very clear channel, respects the bottom, respects the top, all the way up. And we finally closed below it on Thursday. Friday, we did not recapture into it like we did back here. And now we are firmly closing below the 20-day moving average. And the main thing I wanted to show you is down here. This is the daily MACD right here, guys. Obviously a lot of signals. I don't use this all the time, but I do use it sometimes when it matters. And the daily MACD has crossed down, as you guys see in the past right here. Daily MACD crossed down right here in December. Big sell-off ensued. Little bounce, big sell-off. And back here in August, you guys see the MACD cross down. Look at this sell-off here. Just huge sell-off. So the signs are there for a pullback, guys. If you are long, I would protect yourself. If you want to play long and ignore, just, guys, if you don't agree with what I'm saying, if you don't agree with what I'm doing or calling or anything like that, feel free to do your thing. It's your money. You get to invest how you want to. I'm just here to give my opinion and show you what I see. And personally, right now, is a very big risk of a lot of downside in the market, in my opinion, because we have closed below the 20-day moving average. We have broken below the channels. We do have daily MACDs crossing. The only thing holding up this market right now is Apple and Tesla. That's what the market makers are using. And you guys see, even on Apple here, we got the daily MACD crossing down as well. Let's see if I can make this bigger. Just show you guys. Look at this right here. We're about to cross down. So one more weekday tomorrow on Apple, and the daily MACD should cross down bearish as well on Apple. You got Tesla here as well. Same story. It's about to cross down. It's just a matter of time. When is it going to happen? And you guys seen also on Tesla. I'll show you another thing. There's just negative. There's big red flags to me everywhere. And remember the negative divergence we were talking about with Bitcoin? You guys see it here as well. So you got the daily here making a higher high. And then you got the RSI down here making a lower high. So momentum is to the downside. Bearish divergence on daily. It looks like a couple of candles here could have marked the top. This one in particular, we got a 2-day pullback, but then they just rallied it right back. They made another high on Tesla, and that same candle was just a dirty reversal candle. Yesterday, Friday, they did hold it up all day into the close. Maybe they just wanted to hold up the market to not pay those put buyers. Let's see what we get this week. Other than that, I mean, My thoughts are pretty clear here. Went over some dividend stuff, went over some lotto plays, longer swing plays, dividend account stuff. Let's see what the market gives us this week. Other than that, I'm sorry I rambled all over the place. I probably should have wrote some stuff down and had this better set up. But other than that, if you guys have any questions, premium members, just message me in the chat. I'll be happy to go over any chart and send you guys in the chat. Other than that, let's see what happens this week. Good luck, guys, and enjoy the rest of your weekend.